Hello, everyone. Welcome to the For Investors podcast, where Wall Street meets Main Street. I'm Andrew Gay, along with Gilbert Pies and Zachary Green, and we are the Texas Hill Country Advisors based in the beautiful Texas Hill Country right here in Kerrville, Texas. Coming to you on a lovely Friday. It's fall here in the Texas Hill Country. We don't have many trees that turn a bunch of different colors, but we do have some that do turn some colors. And then we get a nice few weeks of fall weather, maybe 2 or 3 if we're lucky, and that's where we're at. So we're all happy-go-lucky right now, but it's going to be brief. Kind of reminds me of what's been happening in the markets, where we've had a really good run recently, but then all of a sudden the last 2 days of this week, it was like we got whacked with some volatility seemingly out of nowhere. But it's funny, we were talking about, hey, what are we gonna talk about in this podcast, or what are we gonna call it? And we have like how many times in a row brought up volatility and the fact that we keep talking about this theme of return to volatility, but it feels like it's been a year and a half now of us talking about that. So I guess the question I wanted to start with today is there ever a moment in financial markets where there's not expected volatility? What's your take on that, Gilbert?
Well,
shoot us straight.
It's a good point that you're making. Is there ever a time that there's not volatility? There's always volatility. It's just degrees of volatility that we're dealing with. And here lately, we've been dealing with a high degree of volatility. But there's always something. There's always something riling the market. There's always something the market's concerned about. There's a million reasons not to invest. There's a million concerns out there that would make you hesitate. Volatility, though, is what makes a market. Excuse me. I'm already choked up about it. See,
it's so moving.
I know it is. It is so moving. Volatility is what makes the market. For every seller that's out there, there's a buyer out there that's looking to take advantage of the opportunity. Volatility is really I think the worst thing that could happen to somebody that wants to be safe, steady, and really just want to ride out the storms. Volatility can really be nerve-wracking because when volatility strikes, you want to do something because you think that makes you're going to protect yourself.
Or it's going to throw me off of my path or my plan, right? Exactly. Specifically, most commonly, we probably hear like, I'm going to retire at this age. Right. And I need all these things to happen. I need the stars to align. I need this much saved. And then when volatility comes back in, it's like, oh, am I off track? Did this throw me off track?
Right.
Right.
But volatility, I would say, also is very helpful because it tends to drive people out of the market or into the market. And in volatility, I think, is where we find opportunity. And so even though there's a million reasons not to invest, guess what? There's a million and one to invest. And so I think for most people, volatility is a negative thing. But I think if you're a long-term investor that really has a long-term mindset, volatility is actually a very good thing. And you don't mind it. You shouldn't mind it. You shouldn't let it freak you out. You shouldn't let it make you panic. What you should be doing, though, in times of volatility is reanalyzing your portfolio and saying, hey, am I at where I really want to be at? Because if this volatility starts to become extreme, can I stand the ups and downs that are going to come?
If I can't take the heat, get out of the kitchen.
Amen, right? Brother. Right there. Exactly. So if you can't take the heat,
it must be getting close to dinner time.
Then you get out of the kitchen, or you just become a purchaser of the meal, not the preparer of the meal. I don't know if that's a real analogy or not, but
I follow.
Yeah. So is volatility good? Well, it depends. And I would tell you that most of the time volatility is great.
Well, and I think it makes me think of something I talk to a lot of people about quite often, and that's just the fluctuation in asset prices in markets, period. Like, because that's a thing, and we trade, and, specifically you think about the stock market that trades, hundreds, if not thousands of times a second while it's open, right? But the fluctuation, which is kind of like a quantification of like the human emotion, kind of, because it moves so right. And it's like, oh, it's good. Things are going to be good. Oh, things are going to be bad. Oh, wait, they're going to be somewhere in the middle. They're going to be good. But on a longer term perspective, there's actually a school of thought that would say you kind of need, or mathematically you do need an asset that's going to fluctuate or be a little volatile in price to take advantage of something like dollar cost averaging, right? So the price of gas is what I talk to people about all the time. I'm like, think about it, right? You put in $100 a month in gas, and that's all you did, fixed dollar amount. Well, what happens to the price of gas? It goes up and down, right? So one month when you put $100 in, it's going to be $3 or $4 a gallon, and you're going to buy less gallons that month with that $100 than the next month when it's $2 a gallon. You're going to buy a lot more in gallons. And if you repeat that over and over and over again on a longer term perspective, you're basically stockpiling more gallons of gas at a cheaper price, right? So that pushes your average down.
Mm-hmm.
That's the magic of dollar cost averaging. You guys are welcome for that explanation, by the way. I will not send you a bill, but that's a true thing, man. It's a real thing.
Sure. I don't think most people realize that.
Right. And so there is an argument that I would say that you actually need the volatility and need the fluctuations to really take advantage of dollar cost averaging on a long-term investing basis.
Speaking of volatility, Zach, what are some of the things driving volatility this week?
A big one this week seemed to be AI and valuations. So whenever any company has been mentioning AI or deals lately with AI, their stock price shoots right up. And now people are starting to wonder, are the earnings matching the valuation? The prices have shot way up. The earnings haven't quite followed. Besides companies being able to lay people off and replace them with AI, there's not much happening turning more profit. So people are starting to take a step back and say, maybe it's a bit overvalued right now. So let's pull back and go into some risk off assets.
You know, when we were at a conference this week, Zach and I were, that there was a chief economist there for investment company. There was also their head chief investment officer, I think. And one of them talked about was the PE ratio, I believe is the PE ratio, which is price to earnings ratio in the S&P 500 companies. Okay. So if they averaged it out over all those 500 companies, and it turns out, I think the average was like 23, something like that. And compared to the rest of the last few decades, even that's relatively high. And it shows, the data shows historically that we usually don't stay there that long. We usually like pull back. But their point was that the valuations of the PEs kind of have gone up so much like that, and kind of have pushed into that territory because of the CapEx spend from AI. And then the other thing that I would add, because you made some really good points, and I would be in agreement with you that I think that's everything that's driving, the main factor that's driving volatility right now, but also the idea that the major CapEx spend, Meta, Amazon, Google, that NVIDIA, right, that they're all doing, and they're all putting into AI. Investors are wondering if and when they're going to actually see the return on that. And the question creeping into the back of everybody's minds, like, is this actually going to pay off in the way that these companies are expecting it to pay off? That's driving, I think, a lot of the volatility, because up until recently, there wasn't a whole lot of doubt about whether or not that was going to pay off, because I really and truly think it's because profits kept expanding and have been growing. And those companies, especially like NVIDIA, has been, they've been reporting quarterly beats and year-over-year numbers that are good. And so I finally think that maybe we've peaked out on the CapEx spend, and we're finally at the point where investors and analysts and economists are all kind of taking a breath and saying, okay, let's look at this a few different ways. And is it really and truly realistic to think that it's going to pay off the way that we think? And doubt around that, I think, is what's driving a lot of what's going on right now.
Well, I can tell you this, every AI assistant or chatbot I've ever run into as a consumer, every single one of them that I've run into so far stinks. They don't understand what you're saying. You can't have a TV or noise in the background, because then they get confused with who's talking.
I know that was those 1-800 numbers. That I hate that.
I know. None of them work right, but at some point down the road, once these large language models or these other models that they have, for AI, once they get to working correctly, then maybe we'll start seeing some profitability. But for a long time, I think it's going to take a while before we get any of that straightened out, really. Because if you have an accent and you try to talk to these AI machines, they don't get that. Well, guess what? Everybody in the United States of America has some kind of accent. Even us three, we have a Texas accent. If you ask somebody from New York City, they instantly know you're not from there and that you're probably from Texas. People in New York, we think they have an accent. People in Maine, in the Northeast, people in the Midwest, they have
like
an accent.
My brother-in-law and his family grew up on Long Island.
Yeah, they all have an accent.
Yeah.
Guess what?
And they don't really have that. He really doesn't have an accent, but he does.
Sure he does.
Like to us, like you're explaining, that's like my point. It's like he doesn't sound like the actual stereotypical accent from Long Island or New York or New Jersey. He doesn't even sound like that, but I can still tell that he has an accent.
Yes.
And vice versa.
AI is still working, and I think the volatility that we're talking about, a good example of that, real life example of that, is what happened today in the market. Today, this morning in the market, the S&P, the NASDAQ, and the Dow were all down substantially. I think at one point, Zach, you were saying earlier, NASDAQ was down over 2% during lunchtime. And look at what happened by the end of the day. Some news came out. There was some excitement about maybe some breakthroughs in the government shutdown. And the S&P and Dow finished up positive, and the NASDAQ finished down slightly. Still going to be an overall negative week, I think, for the market, but we had some extreme volatility today. And that's probably a good thing, as I argued before, that you need that kind of volatility from time to time in the markets to get people excited and understanding that, hey, there's some opportunities there. Now's the time to jump in.
Mm-hmm.
Yeah.
I'd say we heard something that was pretty good and could wrap up the technology AI discussion. It was that in the short term, technology is very often overvalued, and in the long term, it's undervalued. So people hear about AI, it gets released, everybody's thinking, oh my God, the world's changing right now. And it's a little underwhelming once we get there, across the bridge. But in the long term, AI will be here to stay. It's going to improve things. It's going to make companies more efficient, and it's going to turn a profit soon.
Yeah.
We're just not sure where we're at now.
Yeah. But that's been the case. The other thing that is coming to my mind now that we're talking about this is the fact that we've been in relation to why we've been talking about volatility so long, because we've been talking about, and it's just us, it's like analysts, economists, everybody in the market has been talking about a recession in the expectation of one for the last year and a half, and it hasn't freaking happened. It just has not showed up yet.
It's almost 2 years now. We've been talking about it.
And here we are saying that we're still waiting on it.
Yeah.
Because we all know that anybody that's been around long enough or been in our business, know anything about economics, knows that like it is going to happen again. That's part of the cycle. And if you want to play blind squirrel, like blind squirrel still finds a nut every once in a while, right? They get lucky. You just say that over and over again until eventually we get a 2022 or 2008 or and it'll happen again. Then that 1 year you look like you knew what you were saying. But it's like a lot of times people disregard. It's like, hey man, well, you've been saying that for like 10 years. Well, yeah, but I was right this year.
Yeah.
Like, well, what about those other 9 years?
Yeah. I can tell you what's going to happen. I just can't tell you when it's going to happen.
Yeah. but I think all of that are good. Those are all good concepts to like meld together, because yes, we know it's going to happen again. This is what we just described as evidence that no one knows when it's coming.
Sure.
But that's one of the reasons that we have a job, is to help people navigate those choices and say, okay, yes, these things are true. We don't know about any of that, but what is going on in your life? What are your dynamics? What's your family makeup? Like, what are your goals? All of that cliche stuff can help us determine what of all of that is applicable for you and what's not. And then at the same time, make sure that you're positioned and, you have enough money in this bucket and in this bucket, and you have enough mixture of stocks and bonds and this and that and the other, and yeah, to make it make sense for you. And a lot of times I think people get hung up on get rich quick stuff that usually revolves around trading or gold or the dollar being devalued, right? Or they just get way too caught up in the political narrative or the hubbub, and most of the time that stuff is not applicable to their personal financial situation or even their personal financial future.
Yeah, they get caught up in the noise, and you don't need to be doing that. Even us, we add to the noise because we're talking about what happened in the market this week or next week or whatever. But ultimately, what we're telling you is that as an investor, none of that matters. What matters is consistency, allocation, right? And having a long time frame, long investment time horizon, and making sure that whatever investment you choose, that the risk presented in that investment matches what your expectations are. You put those things together, none of the other noise matters. Shouldn't matter.
No, it doesn't. And that's one of the reasons we just repeat the same thing over and over as far as the line of there is a bunch of noise. You just need to talk to an advisor, and we'd be happy to talk to you about that. Better yet, how about a dual licensed independent advisor? And if you don't know what that is, you should ask your existing advisor if they're dual licensed and if they're independent.
Because guess who is?
Okay. This guy.
That guy over there. Yeah.
All right. Y'all are welcome for our silly sales pitch. Okay. What else? Any parting thoughts before the weekend or leading into next week? We don't really have data. We've been waiting on a bunch of economic data we haven't gotten. So
because of the government shutdown.
Yeah. And
I'm looking for a resolution to the government shutdown. I think that will bring an element of relief to many sectors of the economy. It's not that the government shutdown is going to solve all of our problems, but it'll be one less negative headline out there, dark cloud that's hanging over the economy, and we can get back to doing the business that we need to do, at least government employees. So I'm looking for some resolution on the government shutdown.
Yeah. You got anything you want to say? Speak now or forever hold your peace.
No, that's
Okay.
I think y'all got it.
Well, something Zach and I put together beforehand. I don't have it here. Maybe we'll show it again. Oh, do you want to go grab our the box of names for the drawing?
Yeah.
You want to go grab that? Thank you. Do you have your keys? It's locked.
I don't.
This is live. Y'all are watching live work on the air right now. This is awesome. So before we leave, we're going to do our drawing from.
Oh, yes.
Yes.
Business Expo last Friday and Saturday that we did. We had people draw their name, or we had people fill out slips of paper, put their names in a drawing for a $50 HEB gift card. And we had a substantial number of entries, I think almost 150. Our little box that we were collecting the slips of paper was pretty full. And so we're going to be able to draw our name live on the air so that we can award this person $50.
Except I marked this, but I just realized that I don't know that we got that. I don't know that I thought I got it approved, but I don't know if I did. I did it next. I don't know if I re-entered it at LPL. So we might just have to leave all of it off. I mean, we'll still call a person and stuff, obviously. I have to check on that. Okay. Here we go. All right, you want to do the honors? So in case we leave it in, who wants to do it?
Zach, we're going to let Zach do the honors.
All right. All right. Ready? Do we need to hold on. This is make sure it's not rigged.
Oh yes, we can show everybody. We've got all the names in there. I swear to goodness.
Yeah.
Now you have no idea we actually have names on those papers, but
yeah. Here we go. Ready? Drum roll. All right, he's got one. Who is it?
Julie Osbrook.
Awesome.
Julie Osbrook.
Yay, Julie.
Yay.
Good job, Julie.
We'll contact you next week so you can come by and pick up your $50 HEB gift card.
I should have had mine.
There we go.
Yes. Congratulations, Julie. Okay. Okay, guys, I think that'll do it for us today. Thank you for tuning in. Don't forget, interact with us, share our content. We're on Facebook, LinkedIn, and YouTube. And we'll catch you back here next time. One other thing I wanted to mention before we go. We have some new resources that talk a little bit about the basics of investing. We have a good bit of them printed here in our office. So if you want your own very own guide to investing, please come by our office and pick it up. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.